What's going on, everybody? This is Jordan with Conquer Trading and Investing, and right now we're going to take a look at the S&P 500. We're going to do a full technical analysis breakdown. We're going to take a look at some really interesting charts that I need to share with you, and we're going to all do this all right now in this video, figuring out what's the next move on the S&P. Now, the first thing I want you to notice, this is a chart of the SPY. This is the spider, which tracks the S&P 500. And the one thing that you do notice on this chart are all of these large gaps. Don't you think that makes it really difficult to trade? Come over here, follow me. I'm going to where I trade in the foreign exchange markets and where I just trade the S&P 500. There are no market closes. At the close, an hour after the close of the market at 5 p.m. Eastern time, the market closes for 1 hour. And then as soon as the futures open up for trading, this trades all through Asia, all through London, pre-market New York, into New York. If you're serious about trading, this is where you need to be. Let's take a look. We're going to get into the technicals and we're going to find out what is going to be the next move here on the S&P 500. As right now, we are getting close to breaking this trend line over here, or perhaps by being rejected by it. You could see this large area of resistance right now. We're going to take a look to see what our plan is going into next week in just a moment. First, I do just want to look at some important charts with you. You could see over here, this is taking a look at the Nasdaq during the dot-com bust. You could see the initial sell-off also 37%. And then you saw this enormous rally, 33, almost 34%. And right around here, right? Does that look familiar? Right around there is when everyone thought, all right, maybe it's not going to be so bad. It was just in the fall when we started coming down in October, taking out the lows and then really going on to fall another 47% from the high up here, where we are today. After taking out the lows, you could see that really price just continued down, 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 down. Now, you could see that right now, though, however, there is one big, enormous difference. The Fed expanded its balance sheet by about $268 billion this week. You could see that we're getting close to $6.5 trillion. Now, I want you to look back what was going on. Back in 2000, it was just normal accommodation, right? We did not have this enormous liquidity being added to the market. All right, so I'm not saying that we're definitely coming down and testing the lows come this fall and or breaking them. What I am saying is that we have to just really, we have to look at the big picture. We have to understand everything that's going on in order to be able to go ahead and make the best calculated decisions we can make. This time we do have an enormous amount of stimulus. We've had over $2 trillion in the past few weeks of the expansion of the Fed's balance sheet. Now over here, you can see this is also global. This is also global. It's not only the Federal Reserve here in red that is going ahead and expanding their balance sheet. It's also the ECB and the Bank of Japan. Now over here, we talk about markets climbing a wall of worry in a bull market. And you can see that right now, this index, as far as economic uncertainty, is almost at a complete low. Now, there's two sides to every coin. You have people in the camp of bull, bear, and also hopeful right now. You have analysts from Fundstrat, Tom Lee, saying, listen, we're actually in a bull market, as bizarre as that may sound. That conventional thinking about the path forward is simply too pessimistic. He believes that as soon as we took out 2,800 to the upside, here you go, S&P 2,800, at that point, we've entered actually a bull market and that we're going to go back up and we're going to be looking to test in the highs. Now, he did say, there's 10 times since the indices have sold off, out of 10 times when they sold off and then made it past a 50% recovery, from then on, they never tested the lows. All right, so in 10 times when the equity markets have made a 50% recovery off their lows, out of all 10 times, they never went back and tested them. So that's something obviously that we want to keep in mind. So let's look at the charts though. Let's look what the charts are telling us, because that's where we make our living. That's where we're able to see what is happening. I'm looking at the 8-hour here. The reason I'm looking at the 8-hour chart is because you take the 24-hour, I could trade the S&P over 24 hours. I'm not limited now just to when New York session is open. And then you go ahead and you divide that by 24 hours in a day, 3 8-hour sessions, Asia, London, New York. All right. So the 8-hour is a really nice time frame to not only look at and trade off of, because there's only a few active signal periods a day, but it also, you don't get whipped around, trying to day trade the S&P during the New York session. All right. What do we see in the chart? I want to see, before I come down to a lower time frame, to give you a better look at the immediate local support and or resistance we have. The couple of things that we notice as I zoom back, we have a pretty big area. This was support over here at 28.90, and then it flipped as it broke. You see when it broke, look, after the support broke over here, came back up and tested that broken support as resistance. And from then on, it was almost straight down until we hit the lows. Off the lows, we came back up and we were in this bearish ascending triangle pattern that broke down and leveled off at the support put in over here. Since came up, made new highs over this resistance, and look what happened when it broke over the resistance. Price broke up over the resistance, came back down into that resistance, and that broken resistance then became support. We've come back up, right? We came into this area of resistance, bounced off first, and then put in this new line over here. Now we have this trend line because this became support as we've come up into this area of the 28.92 level and going back to that. This was support, which broke in and became resistance. This is resistance we have over here right now. This is where we are today. This is where it's going to get interesting, but we have a few guides to really help us navigate the next move, because the truth is, and if anyone tells you different, they do not know. And before we find out exactly what that is, there's another thing I want to share with you. And that is this letter coming out of Berkshire Hathaway from Charlie Munger, the vice chairman. And what he's saying about the current conditions is right now that everybody's just frozen. He went on to say, and let me note before I get into this, he does expect that many businesses are going to fail during this current environment that we're in. And what is this environment that we're in? We're currently in a recession that could be headed towards a depression. And they're not saying that it's not possible with the Fed expanding their balance sheet, that we could, not saying it's not possible that during this time we won't see the markets go on and actually go into regain their highs and make new highs, or that we're not going to go ahead and test the bottom, take out the recent lows and make lower lows. We're going to help you navigate that. We're gonna follow what's happening with price to be able to know that, but we need to take a look at the bigger picture as well. And Charlie went on to say that I would say basically we're like the captain of a ship when the worst typhoon that's ever happened comes. We just want to get through the typhoon, and we'd rather come out with a whole lot of liquidity. We're not playing, oh, goody, goody, everything's going. Let's just, plunge 100% off of the reserves into my business. What he's trying to say here is he has no idea. Neither him or Warren Buffett have any idea what's going on. All they know that the biggest storm they've ever seen in their lives is here. They want to survive it, and not only survive it, they want to have a bunch of liquidity to be able to put to work when they do see the storm coming. And you, what I want you to be able to do, I want you to be able to not only come out of this storm with your capital intact, but I want you to, because there's huge opportunity right now. There's huge opportunity in crisis. I want you to come out ahead. I want you to come out way ahead. All right, let's jump back into the chart over here. We have the S&P 500 over here. We're coming up to a critical level. When I say critical level, here's why. We have this big resistance right overhead. Why is it big resistance? This was the big support. Once it, you see, came into this trend line. This trend line right here was resistance, right? This resistance held. We came back down, tested that support again, and plunged through it. Plunged through it, came back up, tested it, the broken support as resistance, and now we're back up to that place right here. This is a key level. If we break above this, level and this trend line right here, that does open up much further gains over on the S&P. There would be over 216 points to the upside, right? That's about 8% to the upside before the next big resistance. All right. So that's why it's a big level. Now, what about on the downside over here? I'm going to look in just a moment at some intraday levels for you to focus on Monday. But this is the bigger picture that I want you to watch. This trend line over here. All right. You can see the touch over here. Yes, this extends down to here as well. And then over here again. Okay. Now, if this trend line breaks over here as we are rejected off this resistance, that's a sign that this strong resistance is really going to hold and that we're coming back down. And if that happens, there's a good chance we come back down all the way to 2620. Now, that's 220 points on the downside. Do you see why this is such a big level we're at on the S&P right now? You have 8% to the upside and 8% to the downside. It's just a really big pivotal moment coming up next week. I'm going to help you through it. I'm going to be looking at this every day next week with you. After the market close, I will go ahead and I will do our analysis and get it out to you. Now, here's a closer look. All right. Now, here's a closer look, and I want you to watch what happened on Friday. On Friday, after hours, we spiked up. Right. We spiked up, came into that heavy resistance where we capped out. All right. And then you could see this little bit of resistance. We traded under, tested it, but then made a higher low right over here. All right. And that's where I want you to focus. A higher low, came back up, and are back in this range over here. All right. So this little bit of resistance is now support. So we're in a pretty tight range as we close into the week. We're between 28.92, our resistance overhead, and 28.52, you could see this was support over here. This was the resistance support. After it broke, came up, it tested that, broke in support. It held as resistance, but we didn't make the lower low. And what happened? We came back above this. So this is support now. All right. It is light local support, heavy resistance, trend line, heavy support. What I want you to, as long as we keep this line over here, as long as we keep this on Monday, 28.52, these are the levels that you need to key off of, okay? Over here, you're neutral in between this resistance and support over here, which is about 1.5% on the S&P. You're neutral, right? If you get down over here into the support, right, you could buy, but if you make a lower low than this local low over here, that's where your stop is. You need to get out. Right? If you're buying off this support on Friday and we come up, right? As you get towards the resistance up here, you move your stop loss to break even. If you get the breakout over here, then you have a fantastic entry. What about to the downside, right? What do? Do we take a short over here if we break through this local resistance that we couldn't on Friday? If you do that, you're coming up into strong support down here, stronger local support down here at 28.09. And that resistance. Listen, the better trade is wait for a break of both of these. A better trade is to wait for the break of this trend line over here and then support. Because at that point, if those two break down, the first thing that's happening is we're coming down to 27.62, 61 pretty quickly. And if that breaks, we're coming all the way down to 26.28. All right. If you're not receiving these updates, here's what you have to do really quick. Go over to that subscribe button, hit that red button, subscribe to the channel. And at the same time, just click that bell icon so that you're notified when I do upload videos. After the close, during the week, I'm going to be uploading my TA on the S&P 500 to help you navigate this really, really critical situation we're in over here. We're at a pivotal point. We're at a pivotal point where we have a possible 8% move to the upside and or downside, and it's going to happen. All right, everyone. I'll talk to you later.